Gold hit $4,140 today, the lowest it has been since late March. Silver touched $63.51 during the session, down from over $68 just 4 days ago. Platinum got hammered. The entire precious metals complex sold off simultaneously in one of the worst single sessions of 2026. And mainstream financial media handed you the same two-sentence explanation. They always reach for when something big breaks in the metals market. CPI came in hot. The Fed is going hawkish. Kevin Warsh is raising rates. The dollar is surging. Rate hike fears. Move on. Here's the thing about that explanation. It is not wrong. It is just incomplete. And the part they left out changes everything about how you read. What happened today? And what you do about it over the next 14 days. Because here is the detail that every financial journalist missed this morning. Today, Wednesday, June 10th, 2026, the institutional order books for the largest IPO in the history of financial markets close at 4 p.m. Eastern Time. $75 billion in new shares, more than 4 times oversubscribed. Total demand approaching $300 billion, chasing $75 billion in available stock. Confirmed by Bloomberg this morning. And the institutions who need that cash, the hedge funds, the sovereign wealth funds, the large asset managers who need real settlement money by tonight's close to lock in their SpaceX allocation, are not pulling it from idle cash in a money market account. They are pulling it from the most profitable trade they have been running for the last 18 months. They are selling gold, they are selling silver. And here's the tell. The data point that proves the SpaceX story is real and the CPI story is the cover, not the cause. The CPI report dropped at 8:30 a.m. Eastern this morning. But if you pull up the silver chart from this morning, silver was already trading at $64.50 at 7 a.m. Eastern, an hour and a half before the catalyst arrived. When the selling starts before the catalyst, something else is driving it. That is the tell. That is the signal. Today I'm going to show you the full picture, layer by layer, that the mainstream narrative completely buried. The CPI data is real. The SpaceX story is bigger, and in 14 days, the comics clock runs out on a situation that most investors have no idea is building underneath this market. Stay with me to the end, because the next 14 days matter more than today did. Let me start with the official explanation. Because the data is real, and you need to understand every number in it before you can understand why it is being used as the public narrative for something much larger happening underneath. The May CPI report landed at 8:30 a.m. Eastern this morning. Annual consumer price inflation came in at 4.2%. That is up from 3.8% in April, an acceleration, not a slowdown. Energy prices are up 23.5% over the past 12 months. The Iran conflict, the oil supply disruption, the Strait of Hormuz pressure, all of it is feeding directly into the inflation number that sits on the Federal Reserve's desk every morning. The monthly CPI gain was 0.5%, slightly cooler than April's 0.6% monthly move. But the annual acceleration is what spooked markets. Core CPI, which strips out food and energy, and which is the number the Fed explicitly targets, came in at 2.9% annually. That is still 90 basis points above the Fed's 2% target. That gap matters because it gives the Federal Reserve institutional justification to move toward a hike rather than a cut. Now layer in what happened last Friday. The May jobs report landed at 172,000 non-farm payrolls added. The market had expected 85,000. That is more than double the consensus estimate in a single print. Rate cut probability collapsed immediately. Prediction markets went from pricing cuts to pricing a rate hike probability above 70% and rising. And then there's Kevin Warsh. He took the helm of the Federal Reserve on May 22nd. His first Federal Open Market Committee meeting is June 16th and 17th next week. The market consensus heading into that meeting is that Warsh will hold rates steady, but formally remove the easing bias from the Fed's policy statement language. That is the institutional signal, the language shift that tells markets the next move is a hike, not a cut. Major Wall Street institutions have already pulled their 2026 rate cut forecasts entirely and pushed expected easing back to 2027. The dollar surged. The 10-year Treasury yield moved toward 4.5%. And when the dollar surges and real yields rise, gold and silver face algorithmic selling within minutes of the release. No human decision required. The system reads the dollar index. It reads the rate hike probability curve. It does not read physical vault inventories. It does not read geopolitical maps. So the CPI narrative is real. The dollar move is real. The rate hike fear is real. Every one of those forces is genuine, and every one of them is applying downward pressure on metals. But here is the question nobody in mainstream media asked today. If the dollar was already rising after Friday's jobs report and gold was already sliding from 4,190 to 4,264 on Tuesday, and silver was already falling to $64.83 on Tuesday, Why was silver trading at $64.50 at 7 a.m. Eastern this morning, 90 minutes before the CPI even hit? The selling was already running before the catalyst existed. That is not how rate hike algorithmic selling works. That sells after the data prints, not before. And that gap, 90 minutes of selling before the number, is the fingerprint of something else entirely. Let me show you what is actually driving this move. SpaceX, ticker SPCX, listing on the NASDAQ this Friday, June 12th, 2026. Pricing tomorrow, Thursday, June 11th. IPO price, $135 per share. Shares offered, $555.6 million. Total capital raised, $75 billion target. Valuation at IPO, approximately $1.75 trillion. This is not just the largest IPO of 2026. This is, by a significant margin, the largest IPO in the history of public markets. Saudi Aramco in 2019 held the previous record at $29.4 billion raised. SpaceX is targeting $75 billion, more than double the all-time record. If the underwriters exercise their full overallotment options, total proceeds reach $85.7 billion. The institutional demand has been extraordinary. By June 6th, Reuters reported total orders had already reached $150 billion, 2 times the available shares. By June 9th, Bloomberg confirmed the oversubscription had grown further. And this morning, today, June 10th, Bloomberg published a story with the headline, SpaceX IPO is said to be more than 4 times oversubscribed. 4 times. Roughly $300 billion in total demand, chasing $75 billion in shares. The institutional order books close tonight at 4 p.m. Eastern. Every major hedge fund, every sovereign wealth fund, every large institutional asset manager that wants an allocation in the biggest IPO in history had until tonight to submit their orders. And here's the critical piece that the CPI headline buried completely. They needed real cash to fund those orders. Not paper, not margin credits, not leverage, cash, settlement funds. The kind that comes from selling something else. Let me walk you through how the institutional playbook actually works when you need to raise tens of billions of dollars in a compressed window. You do not look at your losing positions first. You look at your most liquid, most profitable positions. Because those are the positions where you can sell at size quickly without blowing through support levels and creating a cascade that costs you more than you raise. The goal is to exit cleanly at the best available price, while the underlying position is still deep in profit. And one source tracking institutional order flows reported that more than $12 billion in gold positions alone were liquidated during the 2-week SpaceX IPO roadshow window, specifically to fund allocations in the offering. $12 billion in gold in 2 weeks. Now think about what gold and silver positions look like on an institutional book right now. Gold is up over 60% since early 2025, even after today's decline. Silver is still up roughly 77% year over year. Still up 77% even after falling from its all-time high of over $121 in January, all the way down to $63.51 today. The institutions that got into this trade in 2024 and early 2025 are sitting on enormous multi-year open profits. These are the highest liquidity, highest profit, most cleanly sellable positions in their books. When you need to raise $10 to $20 billion by Wednesdays, close to secure an allocation in the biggest IPO in history, what do you sell? You sell gold, you sell silver. And you dress the move up with the CPI headline that conveniently printed the same morning and gives every financial journalist a clean, ready-made explanation that requires no further investigation. This is a liquidity drain. This is not a fundamental breakdown in the investment case for gold or silver. But wait, let me show you the 3 dimensions of this IPO that most coverage is getting wrong. Because SpaceX is not what people think it is. Understanding what they're actually buying tells you a lot about why the demand is so extraordinary. What SpaceX actually became in 2026. In February 2026, SpaceX completed an all-stock merger with Elon Musk's xAI, combining the world's leading orbital launch provider with a frontier AI lab in the social media platform X. So when institutional investors are chasing SpaceX stock, they are not just buying rockets. SpaceX's S-1 filing, made public in May, disclosed that Anthropic agreed to pay $125 billion per month to rent the entire output of xAI's Colossus 1 data center through May 2029. Then on June 5th, a separate SEC filing revealed that Google signed a deal with SpaceX at $920 million per month through June 2029. Let that sink in. Anthropic is paying SpaceX $125 billion per month. Google is paying $920 million per month. That is over $2 billion per month in AI compute revenue flowing to SpaceX from just 2 customers. Annualized, that is approximately $26 billion in AI compute contracts alone, more than SpaceX's entire 2025 revenue of $18.7 billion just from 2 deals. And Musk has publicly said SpaceX is actively seeking more AI compute customers following those deals. This is why the demand is extraordinary. This is not a rocket company. This is not a satellite internet company. This is now one of the largest AI infrastructure companies on the planet, with anchor compute contracts from two of the fastest growing enterprises in the history of software, wrapped inside the only company that can literally put data centers in orbit. The institutions chasing SpaceX understand what they are buying. The question for us is what they are selling to buy it. And the answer, confirmed in the data, is gold and silver. The crypto market also crashed this week. Multiple analysts published pieces pointing to SpaceX IPO capital rotation as the driver, with investors literally selling Bitcoin and Ethereum to fund SpaceX allocations before tonight's book close. Bitcoin dropped more than 8% over the past 5 days. Ethereum fell over 11%. These are not coincidences. These are the same institutional playbook playing out across asset classes simultaneously. Now, let me show you the COMEX data, because this is the layer that turns a temporary liquidity event into a structural pressure cooker for the next 14 days. Here are the numbers as they stand today, sourced from publicly available CME Group exchange data. Approximately 342 million troy ounces of July silver paper claims are currently outstanding on the COMEX. Sitting in the registered vault, the metal that is actually available and eligible for physical delivery is approximately 84 to 85 million troy ounces. Do the math. For every 4 paper claims written against silver on the COMEX, there is approximately 1 registered troy ounce of physical metal available to back it, a coverage ratio of roughly 25%. And according to COMEX analysts, the market has sat below the 15% coverage stress threshold for 6 consecutive months without meaningful improvement. The clock underneath all of this, June 24th, 2026. That is first notice day for the July silver contract. 14 days from today, first notice day is the deadline that determines everything. After that date, anyone still holding a July futures contract who intends to take physical delivery must declare that intent. The banks and dealers who wrote those paper contracts must then either deliver metal from the registered vault at the agreed price, or they must negotiate a cash settlement and roll the contract forward to a later delivery date. 342 million ounces of paper claims, 84 to 85 million ounces of physical metal, 14 days on the clock. Here is what happens historically every time we approach first notice day with a coverage ratio this wide. One of 2 scenarios unfolds, and sometimes both happen simultaneously. In scenario 1, there's a coordinated multi-day sell-off in paper silver designed to force weak-handed long holders to roll their contracts or close their positions before they have the opportunity to stand for delivery. The price goes down. The uncommitted long holders panic out. Open interest shrinks. The pressure on registered vault inventory is relieved before delivery week. The banks who wrote those paper contracts avoid a delivery crunch by engineering a price decline that scares the longs into leaving. In scenario 2, some percentage of those outstanding claims actually convert to delivery demand. The registered vault inventory gets drained further. The ratio tightens even more. And in some cases, the chain reaction moves in the opposite direction, upward, as the paper market is forced to reconcile with physical reality. What we are watching right now, in real time, is multiple forces operating simultaneously and all in the same direction. The SpaceX liquidity drain is providing the institutional selling pressure. The pressure that started at 7 a.m., 90 minutes before the CPI. The CPI is providing the public explanation that gives every financial journalist a clean headline. The hawkish rate narrative is providing the algorithmic trigger, the computerized selling that hits within milliseconds of a dollar index move. And the first notice day clock is providing the structural backdrop that makes paper silver particularly vulnerable to coordinate selling pressure in this specific 2-week window. Wednesday is also the midweek positioning session on COMEX, the session where short sellers and paper market participants typically build or defend positions before Thursday and Friday settlement flows. The combination of institutional book closing for SpaceX tonight, the hot CPI this morning, midweek COMEX positioning pressure, and the 14-day first notice day countdown is not random. These are not independent events accidentally converging on the same Wednesday. This is the paper market doing what it does every cycle ahead of delivery, using every available force to manage the gap between 342 million ounces of paper claims and 84 million ounces of real metal. The SpaceX drain ends tonight. The deadline for order book submissions is 4 p.m. Eastern. That specific forced selling catalyst has a hard stop, and it is in hours, not days. But the first notice day pressure runs for 14 more days, and that clock does not stop because the IPO priced. Now let me show you the even bigger picture, because SpaceX is not the only liquidity event in this pipeline. Barron's published a calculation that stopped me cold when I read it. SpaceX, OpenAI, and Anthropic, 3 companies going public in 2026, could together create nearly $4 trillion in combined market value and absorb close to $300 billion in new capital from public markets. 3 companies, $300 billion in new capital needed, from the same institutional investors who are currently holding gold, silver bonds, and equities. Let me walk through the sequence. SpaceX is first. Pricing tomorrow, trading Friday. $75 billion raised at a $1.75 trillion valuation. Books close tonight. OpenAI filed its confidential S-1 with the SEC just yesterday, June 9th, 2026. The company has been growing revenue from roughly $2 billion annualized in 2023 to over $25 billion by mid-2026. It is targeting a September 2026 listing at a valuation of $852 billion, potentially reaching $1 trillion, which would itself be the largest technology public offering in history. Anthropic filed its own confidential IPO paperwork on June 1st. Annualized revenue has reportedly crossed $47 billion. The company is expected to post its first operating profit, approximately $559 million in Q2 2026, per sources familiar with the financials cited by CNBC. The IPO talks involve Goldman Sachs, JP Morgan, and Morgan Stanley. A listing as early as October 2026 is being discussed, at a valuation approaching $965 billion. If you are an institutional asset manager, a pension fund, a sovereign wealth fund, a large hedge fund, and you know that 3 of the most important companies in the history of technology are all going public within a 6-month window, and you need cash to participate in all 3, what do you sell? You sell your most profitable existing positions. You have been selling them for 2 weeks already to fund SpaceX. You will sell more of them in September to fund OpenAI. You will sell more in the fall to fund Anthropic. Gold is still up 28% year over year even after today. Silver is still up 77%. The positions that went up the most are the easiest to sell. And the parade of trillion-dollar IPOs does not stop with SpaceX. This is the macro headwind that nobody in precious metals coverage is talking about. It is not just a CPI story. It is not just a rate hike story. It is a structural rotation. Institutional capital moving from the assets that already ran to the assets they believe are about to run. From gold and silver into SpaceX, OpenAI, and Anthropic. The old store of value to the new infrastructure of intelligence. That rotation has a timeline, and it is the next 6 months. Let me be completely straight with you about where the fundamentals actually stand, because I think intellectual honesty matters more than managing your emotions about today's price action. The structural bull case for gold and silver has not broken, not one piece of it. JP Morgan published a year-end gold target of $6,000 per troy ounce as of June 8th. Bank of America sees similar levels. The PBOC buying streak that we covered in depth, 19 consecutive months of Chinese central bank gold accumulation, did not stop in May. Central bank gold buying across all global institutions hit 244 tons in Q1 2026 alone. The structural buyers are not selling gold because of a SpaceX IPO or a hot CPI print. They are adding to their vaults at the discounted price the paper market just handed them. The silver supply deficit is still running at 46 million ounces this year, the 6th consecutive annual shortfall. China's export restrictions that eliminated the safety valve on January 1st did not reverse. Solar demand, EV demand, AI data center demand for silver, none of those megatrends softened in the last 48 hours. The long-term technical breakout from 13 years of resistance above $50 per ounce, which happened in late 2025, remains intact. Silver at $63 is still $13 above the level it spent 13 years unable to close above. The breakout structure holds. And here is the most important honest assessment. The reasons for today's decline are temporary and have hard deadlines attached to them. The SpaceX book closing pressure ends tonight at 4 p.m. Eastern. That is a hard stop. The first notice day pressure runs through June 24th. That is 14 days, and it resolves itself one way or another. Either the paper longs roll or close and the ratio normalizes, or some of them stand for delivery and the physical tightness becomes visible. Either way, June 24th is the clearing event. The FOMC meeting is June 16th and 17th next week. If Kevin Warsh's first meeting produces a hold and language that is more nuanced than the market currently fears, if the dot plot signals one data-dependent hike rather than a full tightening cycle, the rate hike narrative that has driven $300 out of gold in 5 sessions collapses as a pressure source. 3 of the 4 headwinds facing gold and silver right now have calendared resolution dates within the next 2 weeks. That is what separates a liquidation event from a fundamental trend reversal. But I will not pretend to know exactly where the floor is. Nobody does. Silver could test $61 to $62 before first notice day. Gold could touch $4,000 to $4,100 before the FOMC. The path of least resistance in the next few sessions is still lower. Catching a falling knife with both hands is not a strategy. Have your levels, have your plan. Understand what is temporary and what is structural. Let me give you the specific events and the specific levels to watch over the next 14 days, because this is where I want to be useful, not just analytical. The SpaceX institutional order book closes. The single largest forced cash raising event in the history of the metals market ends tonight. If there is a relief bounce in gold and silver in after hours or tomorrow's pre-market, it begins here. SpaceX IPO pricing, $135 per share target. Watch how the final allocation math plays out. If the pricing is smooth and no last-minute institutional sellers are triggered, the metals market loses one of its 3 near-term headwinds. Friday, June 12th. SpaceX begins trading on the NASDAQ as SPCX. First day trading behavior matters. If the stock pops strongly, as many expected given 4x oversubscription, it validates the capital rotation thesis. If it fades on day 1, some of that institutional capital may rotate back. Saturday, June 14th. The CFTC Commitments of Traders report publishes. Watch the commercial short position in silver specifically. If commercial short sellers, the banks and institutional hedgers who have been structurally short throughout this correction, begin covering, that is one of the most reliable leading indicators a sustained silver move is coming. Commercial short covering is what leads recoveries, not price action itself. June 16th to 17th, the FOMC meeting. Kevin Warsh's first press conference as Fed chair. What matters is not the rate decision. A hold is 99% priced in. What matters is the statement language and the dot plot. If Warsh signals a single data-dependent hike rather than a full tightening cycle, the rate hike thesis that has stripped $300 from gold in 5 sessions collapses. Watch for the words balanced and data-dependent in the statement. If they appear, gold should recover the 4,200 level within the session. June 24th, first notice day for July silver. The COMEX clock resolves. Watch registered vault inventory in the week leading up to this date. If it drops below 75 million ounces, delivery stress becomes visible. If it holds, the paper physical gap gets another kick down the road. Either way, this is the event that defines whether this correction has a structural floor or extends further. Gold below $4,140 today confirmed. Next structural support, $4,000 to 4,100 or dollar zone. A hold of $4,100 with any positive signal from Warsh next week sets up a recovery toward $4,150 to $4,300. Silver below $64 today. Next floor $61 to $62. A recovery above $66.50 with volume after first notice day clears is the first technical signal the correction structure is exhausting. Let me pull the whole picture together. What mainstream financial media told you today? CPI came in hot at 4.2%. Kevin Warsh is going hawkish. The dollar surged. Rate hike probability hit 72%. Gold and silver fell. The Fed story explains everything. What the data actually shows is something with more layers. 90 minutes before the CPI printed, silver was already down. Because institutional investors needed settlement cash by tonight's book close for the largest IPO in the history of public markets. More than $12 billion in gold positions were liquidated during the SpaceX roadshow window alone. The selling that moved silver to $64.50 at 7 a.m. was not an algorithm reacting to a number that did not exist yet. It was a fund manager meeting a cash deadline. Add the COMEX structure. 342 million ounces of paper claims against 84 million ounces of physical metal with first notice day 14 days away. The paper market doing what it does every cycle ahead of delivery, using every available macro narrative to force the week longs out before the delivery clock runs. Add the triple IPO pipeline. SpaceX tonight, OpenAI in September, Anthropic in the fall. $300 billion in new capital needed from the same institutional investors currently holding gold and silver. A 6-month rotation window from the assets that already ran to the assets they believe are about to run. Add 3 catalysts with calendared resolution dates. SpaceX book close tonight, FOMC June 16th to 17. First notice day June 24th. This is not the end of the gold and silver story. Pause. The fundamentals did not change in 48 hours. JP Morgan's $6,000 gold target published 2 days ago did not become wrong because of a hot CPI print. The PBOC is still buying. The silver supply deficit is still running at 46 million ounces for the year. The structural breakout above $50 still holds. What changed is a specific window of maximum institutional selling pressure, a window with 3 hard deadlines in the next 14 days. The investors who will look back on June 10th as a clear moment in retrospect are not the ones who panicked out because the CPI came in at 4.2%. They are the ones who understood the layered structure of what was actually happening and were positioned accordingly when the 3 clocks ran out. The paper price on the screen handed you a temporary forced liquidation. The vault did not notice. Here is what I'm watching from this moment forward. Tonight's SpaceX book close, tomorrow's pricing, Friday's first day trading behavior, Saturday's COT report for commercial short positioning in silver, Monday and Tuesday, any registered vault data showing movement before June 24th. June 16th to 17th, Kevin Warsh's first press conference, every word of it. June 24th, first notice day, the number that resolves the paper physical gap for July. I will be back after every one of these with the analysis, not the mainstream narrative, the layers underneath it. One question for the comments before I go. Did you see the selling happening before the CPI this morning? Did you clock that detail in real time? Or did the headline explain it for you and you moved on? I want to know how many people in this audience are reading the clock, not just the price tag. Hit like if this changed how you read today. Subscribe if you want to stay ahead of the next 14 days. Because the resolution is coming, and it is coming faster than the financial headlines will tell you,